Good morning, everybody. It's Monday, November 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3 1/4 at 417 3/4. January soybeans were up 11 at 1004 3/4. And December Chicago wheat was down 2 1/4 at 565 3/4. This morning, we had a number of export sales announcements from the USDA. 150,000 metric tons of corn, 150,000 metric tons of corn to Mexico for 24, 120,000 metric tons of corn to unknown destinations for 24, and 132,000 metric tons of soybeans to unknown for 24. We've got one day to go here until the election. I know everybody is anxiously awaiting getting through tomorrow. So, Dustin, maybe a few thoughts here as we look at our markets starting the week, and then we'll pass it around the room.
Yeah, thanks, Dan. I think the dollar index is probably falling on some uncertainty going into the election. That's certainly positive for our markets coming into the week. So that's falling against the euro, the real as well, and so beans are kind of leading the charge. You're looking at like corn though. I mean, we are also looking at decent river levels improvements from the rain that's forecast for the next 2 weeks, and so there's a huge shot of rain coming in that should help that river system out quite a bit, and that might also be some of the strength that we're seeing right now.
Absolutely, Justin. What's on your mind as we start probably a pretty interesting week, if we're being honest?
Yeah, I mean we're trading through a bunch of moving averages in corn. We kind of went down to the 50-day last week. We kind of held there. Back above. All the moving averages are kind of tight right now. So just we tested the 50-day 2 days ago, and now we're above the 100-day and the 25-day. So we're corn keeps finding support on these breaks. Funds bought 47,000 or something contracts last week. Not a very stellar performance for buying that many contracts. We closed basically unchanged. But that being said, we're every down day we're announcing sales. We're running into business. We're competitively priced in the U.S. for corn. So outside of a 2 or 3 bushel increase in national yields, I think corn's found a good value area here. That being said, we've talked about this a lot with crop insurance now being expired, so the risk for the grower is between now and March, on 2 crop years. So I think that risk is there. Whether it materializes into a big down market or anything, I don't necessarily see a huge fundamental reason that corn needs to collapse here by any means. But I also don't see a reason for a big rally. I think we've got a big enough crop. We just got done harvesting it. I think a lot of growers are sitting on the sidelines, still have a lot of bushels to sell. So I think that's going to cap any big rallies. And, Mexico, these big purchases we've seen, is that just getting ahead of a uncertain U.S. election? I don't know. I don't know the answer to that. Soybeans, on the other hand, I think is fundamentally weaker from a global perspective, especially with the rains and stuff we've got in South America. I just think, I think we're seeing that in price action, right? We're had a nice rally here, but we're not far off the lows. So yeah, just nothing too exciting to say that we need to have a big break or big rally from here that I can see right now, especially ahead of a election in tomorrow.
Right, Ben, what's on your mind?
I look at the moving averages and understand that a lot of that trade is automated. And from a conventional wisdom standpoint, would you want to load up long December with first notice day, basically 3 weeks out, because you're going to have to pay the toll most likely to roll it to March. So kind of conflicted a little bit. I will say that from a negative standpoint, we did cover a lot of corn last week, and the market was still marginally lower. the next 3 weeks could be a lifetime in corn. We could have the automated stuff take off. We could see people rush to buy December corn because it's the front, and then we could ultimately see a big purge as we go to first notice day. So I'm just trying to be neutral here, respecting the inputs that we're going to see over the next day to week or two, and be kind of neutral, right? I don't think you can pick a spot between 10 and 17 to put your flag in the ground directionally. So we've traded a lot of volume in here, and I think you just let it. If it wants to rise, go. I do think that managed money is going to find a lot of headwinds every 5 to 8 cents that they go up. I think there's a lot of corn left to be sold, and we're at a kind of a tough spot to really lay into it. I think I could be a lot more of a believer if this was in early December.
Yeah, Ben, on that commitment to traders too, I think they liquidated 22 or 25,000 contracts of spreads in corn. So I think you're seeing that, it could just be, and we talked about this a lot, just get me out. There's nothing exciting here either way. Like, let's just see how things, it could just be getting on the sidelines. So I kind of view this as a lot of liquidation type trade. We talk about the funds buying, but they're basically neutral. So if I look, I think it's cleaning up this position and just saying, okay, like, got a clean slate going into an election. What do we want to do now?
Yeah. I sort of racked my brain over the weekend going back and forth on election outcomes and market reaction. And I know that it's a lot of times it's a very futile effort, but when you've been, you kind of, as one peer said, this is the life we've chosen, right? And I wouldn't be surprised. The conventional wisdom says that if Trump gets elected, it could be really harsh on grains to start. I'm going to back up for a second and say, what if there's a lot more pent up demand and people race to get it before the transition of power? And that would be, I think, the big shock in the market, as if that we were to see a Trump victory and then a really sharp grain market rally. Might be some great opportunities there. So
it's funny you say that. So I was talking to some traders too that I'm good friends with, and it's kind of the same thought was having powder dry for this, because if somebody, you don't know how some of these algorithms or trading systems work. If Trump were to win and we were down sharply because we're going to tariff everybody and it's going to be the end of ag, like, I think you should be there to buy it, and vice versa. If he loses and we pretend it's a super bullish ag environment, you probably better sell it. So I think there is just a lot of that powder dry mentality right now.
Yeah, and it's funny, we talk about this in the mindset of a trader trying to go through and in game plan and handicap. And this election to me reminds me a lot of Y2K. And for anyone that was around then, it was going to be the end of the world, and no one expected, no one knew what to expect come January 2nd when we walked back in. And it was the biggest non-event of probably 30 years in this ag industry. So
Ben just tried to age us all. We were around for Y2K.
I know you guys were probably watching Transformers and this or something. But we do tend to overanalyze some of these events. So I just think you got to let it come to you. So.
No, that's good advice. And I guess to that point, if you're sitting on a whole bunch of grain, and by no means it's a recommendation, but it's like, silly orders, right? You see, like, it almost goes back to like report day thinking, right? Like, if you saw some crazy, wacky stuff when you're sleeping, you wake up in the morning and you got something off, it's.
Yeah. I mean, think about, like, no matter who wins, there's not gonna be some policy that's like, hey, tomorrow we're going to mandate $6 corn. Right. So if that's your big bailout plan, I mean, I think you have, to your point, working orders, like, the positives that we have in our favor are, options are super cheap. If you look at 19% vol, I mean, typically Dustin was looking at this, what goes up to kind of peaks in June, July at 30, 32, low 30s usually, outside of a major drought or something, but it's cheap. It's cheap protection here if you do want something to get you through, we'll call it next March, kind of get you through that time frame where, crop insurance kicks back in. If you just look at the risk is definitely to the downside. I mean, there's no way to say it's not for growers. A lot of unsold bushels, a lot of price risk on the downside. Hopefully we have bull markets and everything's great, but I'd see that as the biggest risk, between these crop insurance periods. And it happens, last year was a really good example, which we've talked about a lot, but really drew down a lot of working capital for a lot of producers and made it a really tough year last year between when crop insurance expired and when we had, spring planting. So just keep that in mind on rallies. To Dan's point, get something protected.
Very good. Well, we'll move quickly here, Ryland, over to livestock. Last week, looking at pork production, pretty solid, up 2.4%. Slaughter was up 2.3%. Beef, on the other hand, production down 0.9%, and slaughter was softer as well. So maybe a few thoughts as we start the week here on the livestock side.
Yeah, definitely. I mean, the slaughter came out just a little bit weaker than expected. Overall it was like 615,000 head versus, 620 to 630, I think we were looking for. So it seemed like the market really started to kind of front run it a little bit, especially with cash being a little bit weaker in the north. We saw 190 trade last week in the south, and, overall 296 to 298 for the dressed. So, I mean, overall, it just seems like that kind of weakness, market was trading in front of it for the most part, especially with beef prices starting to weaken up. So whether that's a trend that's just going to continue from here on out, hard to say, but it does kind of feel like the north seems to be a little bit better supplied right now, just from the cattle side of the business versus the south. So could see another deviation of those, that spread a little bit, but so we'll be looking for cash indications, anything on that front. And obviously there's going to be some concern ahead of the election, but overall it seems like managed money really wants to carry a big long meat position right now, with their net long 98,569 in the cattle. They bought 8,100 previous week. And then on the hog side, there's a lot of new records here. You got a record producer net short of 166,000 contracts. You got the funds tied for a record long position. So I mean, it's going to be pretty interesting. I mean, open interest is record high for this time of year. So I mean, like, there's a lot of big bets on either side, and the trend has been really good in the hogs. It just seems to have slowed down a little bit, but you still made a new contract high on Friday. So it just seems like the supply of hogs is not what we thought it was going to be. And overall, this or the pork rally has just been just mind-boggling, contra-seasonal, everything. So lots caught this market off guard, I think, but we've priced a lot in at this point. So just kind of like feels like it could kind of go either direction with everybody holding really big positions right now. So there's going to be probably a pretty heavy amount of volatility in the next couple of weeks.
So Ryland, it's interesting because very few commodities have record open interest right now. I mean, that's the one I can think of, honestly. Maybe gold, right. But you look at crude oil, you look at grains. I mean, open interest has been down sharply. So it's interesting that this is where they've decided to place their bets.
Right. And I don't know exactly what the rationale is. I mean, I know just from a supply standpoint, the narrative is still there as far as cattle. Like, there's a good chance that we're not going to see the expansion that we want to see come January. And on the hog side of things, it felt like somebody kind of knew that the hog and pig report was probably a little bit overstated as far as the upfront supply, because we've been nothing but going straight up. But I don't know, it does kind of feel like maybe there was some concern ahead of this election that if you did see a Trump win, there could be another round of these tariffs. And it feels like, we've seen a big buying spree from a lot of our bigger export buyers. And it's really hard to kind of outguess that kind of demand, but it feels like the market figured it out pretty fast that somebody's going to need something, and this is where they put all their chips, to the log side of the market. So,
you wonder if I don't know corn, like Mexico with corn, they're up 35%. I mean, they're so is it is there that much going on where just nervous about we're relatively decent prices and just let's get some on the books just in case?
It seems like it seems like they're big supplies or big purchases. To just be a coincidence right before a major election, but that's just my opinion overall.
Oh, very good, fellas. We just came into the open here. December corn up 4 now at 418.5. We get January soybeans are up 12 3/4 at 10.06, and December Chicago wheat's unchanged right now at 568.5. We will have crop progress and conditions here at 3 o'clock Central. So we'll be sure to take a look at that. We'll visit about that in tomorrow's War Room as well. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. So once again, thanks to everybody that supports the show and tunes in every day. We are doing this every day that the markets are open. We're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.